So, hello everyone, a very warm welcome to all of you in our today's live session. And once again, a very warm welcome to all of you on our new YouTube platform that is there to cater the needs of RBI Grade B, Grade A aspirants. Now, in today's live session, you guys must have seen the thumbnail. We will be seeing the important data that RBI has released in context of FDI. Now, see, FDI is something. Now, what is the importance? What is the important thing that a student or an aspirant of RBI, and student and an aspirant of RBI must be knowing about the FDI or FPI, whatever the data is in the news. Now, see, first of all, the basic fundamentals. Okay, the basic, you can say, fundamental includes the static components. What is FDI? What is FBI? What is FDI? What is FPI? What is the nature of these investments, how it impacts our economy, okay? What is the significance of these investments, what is going to be the policy, you can say the impact on our economy or on policy, and why it is important. So this is the static content, okay? This is the static content that you should be having on your head at all point of time. Now see, if you neglect the static part, now you are done with the static part. But these kind of topics, that is FDI or FPI, is something becomes important when whatever the data or the current data that is going to be there in news, okay, at that point of time. A static component, something that can be asked in any phase 1 or phase 2 or in interview, but they will be asking the FDI or of FPI, or even if they want to ask the static component, they will be asking the same. If any current affairs news or any recent data is going to be there in trends at the timing of examination, okay, so then it becomes important. So for the static component, we have already taken a live session on, I think, on Friday. So in that session we have covered all the static component about FDI and FPI. So if you want to have a look, if you want to clear your basic concept static component, then you can refer. Just wait. Then you can join, okay? Then you can watch that live session. All of your basic idea, static component that is required to comprehend in regards to FDI or FPI will get clarified over there, okay? In the session, the last live session that we had. Now in today's discussion, as I told you, we will be seeing the data that RBI has released. So what RBI has released, now we will see it, okay? FDI inflows plunges 98% in May 2025 RBI data. So now see over here, FDI inflow plunges, declined 98% in May 2025. Now we'll see what is the reason behind it. Multiple, you can say the uh, geopolitical tensions are going on, multiple wars is going on. Then on the same time, we have tariff situation that is going on. Okay? So we will see what it is all about. We will see. So why is it in news? So as per the RBI data, net FDI inflows plunged by 98%. The net FDI inflows, it means the gross FDI that we received. Okay? That we received, if you deduct the outflow or overseas outflow investment. So whatever we receive and whatever goes from our country, if we subtract that particular thing, now we'll come to the data of net FDI. So net FDI inflows plunged by 98%, and that's a huge number. Okay. It fell to 35 million, only 35 million. It used to be around in billions. Now see, only 35 million fell to 35 million as per the RBI data. So if RBI is releasing something, it becomes important. Okay? If RBI releasing something, any such kind of data, even if some ministry or department is releasing, it is important. It's not like that. But yes, RBI, that is a is in charge of foreign exchange of our country, and RBI knows very well what is the condition. Okay? Even RBI is the authority which informs the central government or central government authorities about the conditions of foreign exchange or FDI in our country. ठीक है? It reflects changing investors' behavior and macroeconomic trends. And whenever RBI says that it is an implication of changing investors' behavior, and it is having impact on macroeconomic trends as well, then it is going to impact everything. It is going to impact our GDP. It is going to impact our inflation, our employment, everything. Okay? And that's why it becomes important. Just wait for a minute. Now, so key highlights, we will see what are the key highlights. Let me tell you the key highlights as well. So net FDI inflows fell 98% year on year basis to just 35 million in May 2025. Now see, 98% or year on year basis decline हुआ है, and it was 2 plus 1 billion in May 2024. Now if you see, in May 2025 it is only 35 million. Such a huge decrease है ना. As I said you earlier, it used to be in billions, the net FDI flow. I'm not talking about the gross is going to be in billions only, but the investment we are losing, or the foreign direct investment that is going out of our country, is also a significant number now. That is a reason है ना, that we are seeing this decrease. So net FDI inflows fell 98% year on year basis. That used to be 2 plus billion in May 2024. Now it is only 35 million. So as I said, the data is there. Okay? As I said, they will be framing questions from a particular topic if any data in context of that topic is in news. But this data is something, no, any other kind of data can also be in news, but this data is extremely important because you see the decrease. It must have created havoc in the departments and in the RBI, that what this decrease is significant. 98% year on year decrease. It used to be in billions, now it is in millions. Okay? Now, gross inflows down by 11% to 7.2 billion. As I told you, gross is going to be in billions only, whatever we are receiving. But repatriation is something surged. It means repatriation means the investors are taking their investment back to their origin country. This is a repatriation means. Okay? It also surged and it amounted to 5 billion. Okay? It amounted to 5 billion. The repatriation is also having an increasing trend. Outward FDI rose to 2.1 billion. Now see, outward FDI means whatever we the citizens of India are investing in outside worlds, in abroad, in foreign countries. This is what outward FDI roses. FDI means. Now repatriation means whosoever has invested foreign currency in our country, or the investment whatever the foreign entities have done in our country, now they are taking it back. So if you see, gross inflow is 7.2 billion. Repatriation is having a significant rise, that is 5 billion. And outward FDI is also has on a rising trend, that is 2.1 billion from 1.8 billion. Net FDI is also 99% lower month on or month basis. Okay? Foreign reserve remains strong at 696.7 billion. Okay? It can cover the imports of at least upcoming 11 months, and it can also cover 95% of external debt coverage. Okay? For the upcoming 11 months. This is the situation at this point of time. The recent data that RBI has released, this is the situation of FDI and foreign reserve. What are the, now see, these are the extremely important data. Okay? What are the top sources from where we are receiving the FDI? What are the different sectors in which we are achieving highest amount of FDIs? Because it it is going to have a great impact on our policies. If we are saying, okay, these are the three countries from where we are receiving higher amount of foreign investment in any condition, even if our economy is not doing well, but these countries are the prominent sources in doing the foreign investment in our country, then we will be having better relation. We will be trying to have better relation. We'll try to sign any kind of free trade agreement or other kind of stuffs with those countries from where we are receiving higher amount of foreign investment. This is how knowing the top source is extremely important, because it is going to have a huge impact on your policy making. Inflows by sector. So if you see, we will also get to know that what are the different sectors that are garnering the highest amount of foreign investment. Okay? It means, what does that mean? It means that these are the sectors that are lucrative for foreign investors, and they are apprehending that in these sectors of Indian economy they will be having more profit. So we can focus more and more on those topics, on those sectors. Okay, we can provide better opportunity to the investors. On the same note, we will also get to know about those sectors we are that are not receiving that much amount of FDI. So those sectors we can work on those sectors as well. Okay, and we can improve the conditions or the ease of doing business we can do for those sectors so that they can also receive the highest amount of FDI. Now, outward FDI sectors, which the sectors from where they are taking back their investments, and destination of outward FDI. Which are those countries in where we are investing? So outward FDI means those sectors where Indian investors or the Indian citizens investors who are investing in foreign you can say countries. What are those sectors where, as an Indians are interested to invest? Okay, and the destination are the countries where we are trying to invest. These might be the countries, etc. Now, top sources, if you see, Singapore, Mauritius, UAE, and USA. Now, these four countries are the top four sources from where we are receiving the FDI. Okay, 75% of total FDI that we are receiving is coming out from these four countries. Do remember the name of these countries, it is extremely important. Now, inflows by sector. So, if you see what are those sectors which are receiving highest amount of FDI, so manufacturing sector, financial services, and computer services. Now, see, computer services is basically the IT services is going to be in there in trend always, but manufacturing sector, if you see India's economic growth, है ना? So whenever country transit from a developing country to a developed country, there are three sectors basically in economy: primary, secondary, and tertiary. Primary is agricultural and allied activities. Secondary is all about industries and manufacturing, and tertiary is all about this IT services and all. Okay? Now there are we are fourth as well, in which we talks about the education and other things, but basically these three sectors you can see. So third, tertiary sector is all about services. Okay? Now see, whenever a company transit from a developing country to a developed country, they transit systematically. First, the weightage of agricultural sector or the primary sector in the GDP of that country will decrease, and the manufacturing sector will increase. Then what happens? The share of manufacturing sectors will decrease, and then the tertiary sector will increase with the time. And this is how a country transit from a developing country to a developed country. So the shares of these lower ends of sectors starts decreasing, and the share of higher ends of these sectors, that is tertiary and other sectors, start increasing in GDP. Okay? This is how a country transit from a developing country to a developed country. But in India, if you see, the trend is we have directly jumped from a primary sector to tertiary sector. Our manufacturing sector or industrial sector, or in nutshell if you call it the secondary sector, is not that much prominent in nature. We haven't shown, you can say, a predictive path of transition. Okay, we are not showing a predictive path of transition that the developing country and developed country shows in their transiting time. Okay, we are not showing that kind of predicted path. We are on a different kind of path. We have directly jumped from the primary sector to the second to the tertiary sector, and that is the reason that our industrial sector and manufacturing sectors are is not having that much prominent contribution in the GDP. Okay? And this is the thing that government is also trying to cater. This is the thing government is also trying to look after it. Okay? Government is doing a lot of things nowadays to improve our manufacturing and industrial sector. Now, even if you see in the union budget that we have released for this financial year, if you see, government has released multiple schemes for to improve the manufacturing and industrial sector. Okay? On the same note, recently employment linked incentive scheme also got launched in that area as well. If you see, employees will be getting you can say some amount of incentive from the government to generate, if they generates more employment, but it is going to only for 3 years. Okay? For other sectors, primary and tertiary and manufacturing. But for manufacturing and industrial sector, that is a secondary sector, these incentives will be provided by extra 2 years. Okay, so 3 years is going to be there for all the sectors, including the secondary sector, that is manufacturing and industrial sector. But 2 years more extension is going to be there for manufacturing companies and industrial companies. Why it is so? Because government is trying that this particular flaw that we are having, that our secondary sector is not having a major contribution in our GDP, government is trying to look after it. Okay, and but if you see here the FDI inflows that we are talking about, manufacturing is also one of the sectors in which we are having a great amount of FDI inflow of FDI. So that's a positive note. Okay, you can use this kind of data, and just the analysis that we did as of now, you can utilize this kind of analysis in your, and you can provide a better answers. You can code these statements in your interviews as well. It will help you immensely, है ना? If it will increase the quality of your answers, it will increase the quality of your answers in interviews as well. So you should be having this kind of comprehensive analysis. You should be having this kind of comprehensive analysis and idea in regards to this fundamental topics. Now, outward FDI sectors, if you see, we are more investing out of our country in transport, manufacturing, financial and business services. Destination of outward FDIs are Mauritius, US, and UAE. These are our favorite countries where we are investing. Okay? Now, significance. So, sharp FDI, what is going to be the impact of this plunge that we have that we have just saw? So, sharp FDI decline could affect balance of payment and investors' confidence. Obviously, investors will think, okay, this country is having a large amount of outflow of FDI. Okay? The net FDI is getting plunged by 98% month on month basis. If you see, so it can impact the confidence of investors. It can also impact the balance of payment. Balance of payment is what? Current account plus capital account. Okay? Current account is something that we have because of import and exports of goods and services. Okay? And then because of capital transactions, we have capital account. So overall, if you see the balance of payment, the deficit can increase due to net FDI outflow. Positive sign, if you see, portfolio investments net inflow 1.6 billion. Rising repatriation shows profit withdrawal. Now see, what does that mean? The investors are taking back their investments in their origin country. It shows profit withdrawal. They are getting profit, and then they are taking withdrawals. Okay? Exit amid global and domestic uncertainties. Because of this global and domestic uncertainties, the repatriation is having on a larger scale. Now, these global and domestic uncertainties are our relations with Russia, then US applying a lot of tariff on us, then on the same time we are supporting Russia, we are coming closer to the BRICS country. On the same note, US is giving us warnings. Okay? It is a it is a point of irritation for US that we are getting close to China, we are getting close to Russia. These kind of global domestic uncertainties, and if you see the top sources from where we receive, US is one of the things, one of the countries. Okay? So it becomes important. Now, if US is having this kind of apprehension, obviously they will be taking back their profits and their withdrawals. है ना? So this is how the rising repatriation shows profit withdrawals and exits amid global and domestic uncertainties. Healthy reserves provide cushion against external shocks. So even in case if the situation deteriorates, or in case if the situation, the particular scenario that we are having at this point of time, if this situation continues, we are having enough amount of reserves, and this is the point of keeping a healthy amount of foreign reserves with us. Okay? So even if the situation continues, okay, and even if it deteriorates, we are having healthy reserves with us to provide cushion against the external shocks. Then policy and economic implication, how it is going to impact our policy, how it is going to impact our economy. So if you consider that particular thing, we need to revive investor sentiment through reforms, tax clarity, ease of doing business. Okay? Tax clarity. Recently, we have just introduced only two slabs for GST. We are having multiple kind of reforms in context of GST and other taxation. Okay? So we are trying to revive the investor sentiments. Okay, that this is okay, that we are working on our ease of doing things. Okay. Now you don't need to get bothered by the multiple slabs of GST. Now we are having only two slabs, and these kind of reforms we are doing to revive the real the to revive the investor sentiments. Maintain macroeconomic stability to attract sustainable inflows. Now, macroeconomic stability, what does it mean? On a macroeconomic level, what are the different things that we consider in our in our economy? So, unemployment, employment, you can say inflation. Okay, these are the particular things that we saw, or the national income, GDP. All these stuffs we saw on a macroeconomic time frame. Okay, when we see the economy as a whole, we talk about inflation, we talk about employment, we talk about national income. So we are trying to maintain the stability in all these microeconomic references to attract sustainable inflows. Okay, close monitoring of capital account trends critical for rupee inflation and interest rate. Okay, so capital account trends, whatever we are having trends in capital account, that is also one of the things that we are having a close monitoring on for rupee inflation and interest rates. ठीक है? Now see, so recently if you have seen the Moody, then S&P or Fitch, all of these you can say the international credit rating providers having a significant stature in a global economy, or in a global level, they have improved the credit worthiness of India. I think they have improved it. Most of them has improved India's credit rating from triple B negative to triple B. है ना? This is the growth we are having at this point of time. So Moody, S&P, all of these international credit rating agencies have improved, has increased our credit rating. ठीक है? So that is happening because we are having a stable macroeconomic condition. If you see, our inflation is within the range, that is 2% to 6%. Our inflation is in this range. Now we are decreasing our repo rate as well. ठीक है? Now we are having better stability in our economy. We are having recently, if you must have seen, the GDP growth for quarter one was real GDP growth was also phenomenal. So these macroeconomic stability we are trying to have, and we are able to do. We are able to stable our macroeconomic condition. And now, if you see in upcoming months, once this tariff tussle that is happening, ठीक है, if when this particular tariff tussle will be subsiding, all this macroeconomic stability will come in front. ठीक है, so once you will see after 2 to 3 months, this decreasing trend, the net decreasing trend that we are having in FDI will be reversed for sure. ठीक है, now, so this is it for today's discussion, and I hope that you people must have got extremely valuable insight. Now, these kind of data is extremely important from the point of view of upcoming RBI Grade B examination that is happening on 18th of October, next month, sorry. ठीक है, and if you want to download this data for your exam preparation, then you can download it from the Ecoholics app for free of cost. Just download the Ecoholics app from the Google Play Store, available free of cost, and then you can download this data for free of cost. Even if you have any queries in regard to the paid courses or the paid data that we provide for your purpose, then you can contact on this number. You can take a screenshot of this number, and then you can contact to our academic counselors, and all of your queries will be answered appropriately in a most professional manner. ठीक है? If you have any kind of queries, if you want to take any paid courses, if you want to download this free data, you can contact on this number. ठीक है? And I hope that you people must have got extremely valuable insight from these live sessions. Now, tomorrow as well, we will be coming up with a new and interesting live session. Do subscribe to our channel and turn on the notification bell so that you can get the notification whenever we go live with such interesting topic. Till then, have a great day ahead. Bye.